Hi, welcome to this video date, which is on Sunday, the 8th of July. We're just going to be looking at what we consider to be a really great risk to reward trade setup. It's USD MXN, and we're going to the charts in a moment. Now, in terms of this trade setup, obviously we're looking at USD MXN today because it's a current trade setup. But wherever this type of setup appears in the Forex markets, it's the trade that we like to do the best. Why? Because the risk is very low against the potential reward. So it's a trade setup always to look out for in our view. I'm just going to discuss it in more detail, obviously, when we go to the charts of USD MXN. Now, when I'm doing my analysis, please do keep in mind it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques, our analysis of USD MXN and 14 major Forex pairs, you can click on the link beneath this video and get live access to our member centre. Right, let's go and take a look at the setup. We're going to start first of all with the weekly chart of USD MXN.
Just on the weekly chart very quickly before we go to the daily chart and do our levels of entry, stop and target. I want to look at the big weekly levels. I've already drawn one. I'll just do a little bit more on the chart in a moment. Also, I want to describe the trade setup. Obviously, it's in USD MXN here. Wherever it occurs in a currency pair, we will look to go for the setup. So the setup is this. There's a big move caused by trader sentiment only. Okay. There is no change in the fundamentals, big fundamentals behind the pair. So it's just trader sentiment. Okay. Then we want technical levels to give us good risk to reward. And we're normally looking for 3 to 1, 5 to 1 sometimes, or even more. And you can see here, Mexican peso, best weekly move in 7 years. So we pushed the dollar down on this big red candle here. Now, from our perspective, it's coming into a support area. Okay. Now, incidentally, in this pair, we did trade it long, got stopped out for decent, really good profit. Then we came in and tried to buy the dip, and the market taught us a lesson and made us look a little bit stupid because the move has run far further to the downside than we thought. But we're at such a level now, or levels, that a rebound is very likely. Okay, so I've isolated this level here, the 19 level, because it came through. Then you had those few pokes to try and get through. That one failed. That one decisive. Up she goes. Now we've returned to this support level. Also, if we're looking at charts, we'll always look at the 20-week or 20-day moving average, and it should normally provide a sort of value area. So if you're bullish, as we are in this pair, it should find support around the 20-week moving average. It's obviously dipped a little bit below it. Okay. Now what we want to do is key off this level on strength, and where would we look for? Well, I mean, basically you should go back up towards the 20 level, but there's no change in the fundamentals. So I'm looking for a move at least back up to here. So those two bodies, and possibly even a run on to there. Okay. So if this trade comes off, and of course it's got to come off, it offers for us a really, really great risk to reward. Now, let's go and draw our levels on the daily chart. We'll keep the weekly levels in mind as well. USD MXN, we'll just draw our levels in a moment. Now, in terms of just being a sentiment rally, what I want to do, just first of all, explain why. New president was voted in last Sunday, Lopez Obrador. He's left-wing, he's a populist, but as soon as he got elected, he looked to reassure the markets he'll be business-friendly, won't let debts get out of control, all that sort of soothing talk. Okay, that causes the rally because the market thought he would not be business friendly. But what has actually changed in terms of the fundamentals? Nothing. At best, it's the status quo, which was before. They haven't improved. Okay, and also his words, I think, should be taken with a pinch of salt, so to speak. He's voted in on a populist left-wing agenda. He's not going to be as business friendly as the market thinks. He's not going to go against the people that voted him in. But like I'm saying, at best it's the status quo, even if he does do what he says. This brings in George Soros's reflexivity and mispricing. Okay, now I just want to go through this briefly. I've done a whole video on it, but that's the logic we're using here. George Soros always said that, I always come from the assumption the market price is always wrong. It'll misprice. Now, of course, you can say the market price is the price. It's right, but we've got to trade it going forward. And in this instance, what has happened is traders have sold the USD, bought the Mexican peso on things are going to be better when they're not. So George Soros goes into this in great detail. His book on reflexivity is absolutely fantastic. We've done a video on it as well, so you can take a look. But they've pushed prices too far. Fundamentals are bearish. Okay, let's take a look at them. Rate hikes in the US are causing capital outflows from Mexico. Okay, so money is flowing into the US. This is important. The Banitsko, the central bank, they're having to follow the Fed with higher rates as the Fed hikes, and the Fed are going to be probably hiking 2 or 3 more times in the next year at least, I would have thought. So they have to follow them higher to stem or slow down capital outflows. They're already at an interest rate of 7.75%. That's already stifling the economy. It could go above 8 soon, which would be pretty dangerous for the Mexican economy. Trade tariffs. Donald Trump was looking to put trade tariffs on lots of countries, obviously, and Mexico, obviously, he's done so. And what you also got is heavy loans in USD in Mexico need to be repaid. They're more expensive. Less loans are being granted, so less money coming into the country. It's an emerging market. Relies on capital inflows. Now, the MXN, it's not just overbought on the USD. Every single major you care to look at, Euro, CHF and GBP, for example. Now, in terms of, I'm using the USD on this chart in terms of a trade setup, but you can get great setups in the Euro, CHF and GBP as well. So you can really take your pick. If you're, for example, bearish of Euro USD, you go for USD. If you're bullish of Euro USD, you could go for the Euro, or you could do both. The Mexican peso just run too far. Now, what we do know from the weekly chart is we have a level, which is weekly support, which is here. Okay? And we're just basically sitting right on it. Now, in terms of my chart in the member center, I've done a position if we go higher on Monday. What if we go lower? I have to see how we go, but let's say we did overshoot the 19 level. I would probably look to come straight back in through the level. Okay, or if we really move down, just keep trailing the entry down. So be patient. You've got to wait for strength. But 19 gives way. I'd look to come back through. She runs on. I'll just lower the entry. But where we are right now is a good level to come in through. Well, what I quite like about it, because it's a sentiment strike, you get the big red. Well, you got blue there, which is very big. Okay, then you get the red and the follow through. Okay, because we're oversold. When I say oversold, looking at these Bollinger Bands, they've really widened out, which shows high volatility. We're outside the band. Very often, you can just come back in within the band. You've also got stochastic and oversold extreme, RSI down at a chart bearish extreme. So our view is to put a trade just straight back in as soon as we come through that outer Bollinger Band. Okay, a small one. Okay, we like to do like a small trade. I mean really small, just to get the aggressive entry in. Okay, then we can look to add, and this level here, which is around these 4 candles, draw them in. That is where the 20-week moving average is. So you could look to come in through that level. So you could come in through that high if you want to be a bit more aggressive. When I add in my position, I'm going to go through the 2 bodies. I think that's enough confirmation. And then see if she runs higher. Where could she run to? Well, from our perspective, 20. Okay, I've done a trajectory line. You've got the 20-day moving average there as well. So same as the weekly chart, and then a run on up to these highs. Now, in terms of the 20-day moving average, always like it. Prices get too far away from it, which they have here. we'll look for it to get back to the level. Because yeah, prices don't tend to stay away from the 20 for too long. You see, we're as far away from the 20 as anywhere on this chart. Often happens when you get an emotional price spike. So really looking for a move up towards the 20 level. I'm just drawing a straight line in, so we just have a look at the risk reward. Sorry, there we go. Now, coming through here, let's see, coming through the bodies. Like I said, we'll put a small trade in earlier, but we're aggressive in terms of our trading, as everyone knows. Where would you put the stop? You don't want to put it right back behind 19. You want to put it back well clear of this tail, so give it plenty of room. That will give you about a 3 to 1 to there. And up to there, give you a 5 to 1. So really, from our perspective, it's a good trade. It doesn't matter if we're wrong with it. Yeah, because the risk is not too great against the reward. We can always have another go, so to speak. But I really like doing these trade setups. They're very contrary. They're against the majority view. And yeah, when prices get pushed too far, and speculators, let's say, exit on stop, it's very crowded now with speculators short. So that should give it a good move to the upside. Once it gets moving to the upside, of course, the stop will then be trailed. And we'd want to get the stop in pretty quick, close to our entry, and then, you know, past our entry if possible, of course. But yeah, I just like these trade setups, right or wrong, always for us good ones to go for. This is actually a wild contract, you know, so you don't need big size. Okay, nice and volatile, tiny size will do. We shall see how it goes, but yeah, I really like the look of this trade, so we shall see. Thank you again, obviously, for watching me. Take care and have a good day.